Alright, recap today, Thursday the 16th of July. I caught a win on my eval. I made $1,500. I bought this eval yesterday and I took a small loss, which I actually haven't recapped, I'll do that later. But then I made $1,500 today, so I'm up $1,200, right? Now, what was the trade? Now, for me, the day was clearly bearish, right? Because the reason is the 4-hour time frame is extremely bearish. We've just been trending down aggressively. We opened up market and we were very close to this low, right? So obviously we come down, traded higher again. We opened up market somewhere here, this low. Pretty obvious, right? There's nothing else as a draw, right? So we've got a draw. Now to validate our draw, what do we need, right? We need a place where price could trade the opposite direction to and then stop. And for me, that was this hourly bearish gap. So we had an hourly bearish gap here. We had this one up here, but this had already been filled. So we had this one here. Thought we could tap into that, go lower. Obviously does line up with 15-minute gaps. There was one, but there's a tiny little one there. But the main thing you're looking at here is the hourly gap, right? So when we get into the hourly gap, so we open up, first of all, we trade higher, do nothing, trade higher, and then we displace lower. And that's when I took my short, right? Because we're inside of that hourly gap. So I'm fine to take a short. I took it on the 30 seconds. Now, you could have waited for the inverse if you wanted to, but I thought, you know, well, how I trade now and how I've been trading recently is I prefer displacement over an inverse, right? So when I see a displacement candle like this, or I see a protected swing high, a rebalance that doesn't take that high, and then a displacement candle, for me that is where I will be taking a short with my stop of this high. Obviously you could have waited for the inverse and it would have looked something like that. It's not much worse risk to reward, but you know, it is just a little bit worse. And then yeah, the kind of good, if you would, target would have just been this low, because if you go on like the 15-minute chart, it's just the next 15-minute swing low. But if you really wanted to, you could have held it lower. Like I held it lower. I held to the 4-hour low, right? Because obviously these 15-minute lows, they are good. But if you have higher time frame narrative, you can hold to the 4-hour low. And if you look on like the 5-minute, they're in like a low resistance formation. So you know that when we trade through them, we're just going to dump through them like we did, right? Aggressively. Like we're not going to take this low and then kind of chop around and stop. We're just not going to do that. This low is so close to that low, right? And these are low resistance, so it's building up lower time frame low resistance closer to our high time frame draw. So we absolutely just flew through it. I held to this low. I actually held a tiny bit longer just for the 1500. I think this was like, I would have made 1460, so I just held for a little bit longer, somewhere like there. I mean, I can see I sold at 29297. So 292. 29297.25. I don't know, something like that. I don't know why it's made it whatever. Right, somewhere like there basically. 4-hour trade, really nice. 30-second entry, just absolutely dumped. For break even, trade lower, rebalance. Once we take this low, I go break even, which is what I did. I actually just put my stop at this high because there's not much difference. If we take that high, we're going to go to break even. We should not take this high at all. It was like $80 in profit, whatever. Come and take that low, and now we're just going to chop for the whole day, right? This was the move. This is the move you should have caught. It's the only really good move in AM. Might be little scalps later, but this was the main move. It was obviously, like 180 odd points, which was nice, and that was the trade. Any questions, comment them. But yeah, just pretty easy, clear draw, nice retracement, and then the lower time frame entry, and just hold to the draw. It doesn't get much clearer than that. When we're that close to a draw, it is pretty obvious, especially with this much bearish momentum.